is the 77 WABC minicast.
This is the Larry Kudlow Show, and it's great to be with you. And we've got some fabulous news on the stock market that we'll get to in a minute. By the way, you can hear this show live streaming on the Internet. Live stream us on the Internet. If that's easier for you. LarryKudlowShow.com. LarryKudlowShow.com. Hear us all across the country, around the world, throughout the solar system, including the Milky Way. And please, during the week, join us. Welcome. Join us. Fabulous Fox Business Network. 4 to 5 p.m. every day. The name of the show is Kudlow. 4 to 5 p.m. every day. And if for some reason you can't make it at 4, why? Just text your favorite 9-year-old. That's all. She'll show you how to DVR the show. You'll never miss a thing, including yesterday's 1,200-point gain in the Dow Jones. Stocks up 2-3% across the board in all the major indexes. Really quite amazing. It's going to be Dow 50,000 prosperity rocket ship. That's what it was, a rocket ship. And took a lot of people by surprise because we'd been in the throes of a tech correction, especially the software stocks. And we'll talk about that with our experts later in the program. But I'll tell you, I've been around a while. I haven't seen one like this. 1,200 points in one day. 50,000 Dow. 50,000 Dow. When I went from graduate school to the Federal Reserve Bank of New York in, wait for it, 1973. My first job. I was in their JETS program, whatever, advanced promotions or something. Anyway, from Princeton to the New York Fed, 1973. That was a period when the Dow Jones was hovering around 1,000 or less, 750, 800. That's when I started. Went to Wall Street. Finally, a couple years, 3-4 years later, I went to Payne Weber, the old Payne Weber, Jackson and Curtis, and I was their economist. And then I went to Bear Stearns. Of course, those firms are all lost to us. But the point I want to make is that for really 15 years or more, way back when the Dow fluttered around 1,000, it never could really mount a rally above 1,000. And then during the Reagan years, when I was working for the Gipper in his budget office, the Dow went up 12-fold, 12-fold. And we've been off to the races ever since. We've had our tough times, no question about it. The meltdown of 2008, 2009, COVID, other things that I don't want to talk about, particularly wasting time. But here we are at 50,000. And it just goes to show, and this is the point I want to make, stocks for the long run. This is a perfect time. You have a very bearish media. The media is always bearish. All right, the Wall Street Journal running pieces on the front page about how manufacturing is down, and then the ISM Manufacturing Index comes back strong. I mean, and even today, they're barely reporting it, the 50,000. But you had this, little techie sell-off. You can't, as ordinary people, ordinary investors, you can't outfox the markets. You're not going to outsmart the market. And the reality is passive investing, which means you buy and hold the indexes, right? I don't care. The S&P, you can do it as an ETF, other indexes. Buy and hold them. Active management, I know there's some brilliant portfolio managers out there, but they're few and far between. Passive management is cheaper and more profitable. You own stocks for the long run and keep adding to your position for the long run. I just want to get that little ad in. You've heard me say this before. But here we are at 50,000. You'd have missed yesterday. All right, if you're trying to outfox the market, all these hedges, I want to know how many of them figured they were going to be up 1,200 points, 2.5% yesterday. I doubt it, because the prevailing groupthink on Wall Street among the hedge fund community is they're selling software stocks because AI is going to eat up software. We'll talk about that later in the show, but they would have missed it. Here's another thing they're going to miss. You never see this. The reason this market is so strong is because corporate profits, which are the mother's milk of stocks, are very strong. And once again, take a look at the front page of the Wall Street Journal. You got several articles about the Dow 50,000. They're not positive articles, but they don't mention profits. Not once do they. Maybe I missed it. I'll go back and take a look at the paper, or I'll look it on my little phone. I'll get it, pull up the website. They don't mention profits. And profits are the mother's milk of stocks. I have said this for so many decades. Because profits fuel the valuation. All right, the two things you look at, interest rates and profits. Interest rates are stable, all right, stable to lower, but the discount rate is the 10-year, and that's running around 4.25. It's not moving much one way or another. And that's okay. It's a good number, moderate number, and profits keep rising in double digits. In double digits. And profit margins in double digits, 12, 13% for the whole index, S&P 500, Dow Jones, you name it. Profits are the mother's milk of stocks. You don't want to buy if profits are on the way down. You wait. Then when profits recover, you buy them. You buy the stocks. Unit labor costs. Okay, stay with me on this. You've heard me talk about this before. Unit labor costs are wages minus productivity, right? That's the cost of labor. It's basically the best measure of inflation. It's 1.1% unit labor cost. That's all it is for the past 4 quarters. It's fabulous. It shows you how low the inflation rate is, and it shows you why companies are so profitable. Productivity, all right? Output per hour, how many goods each person is producing. Productivity is soaring right now. Probably because of the technology revolution or other reasons. This is a productivity-based rally. Productivity generates profits. Unit labor costs are low. These are the things you should be looking at. Of course, the newspapers don't. Even the Wall Street Journal, they don't talk about this stuff, and that's pathetic. I'm sorry about that the coverage is lousy. But that's the truth. Ed Yardeni, Dr. Ed Yardeni, was on our TV show, I don't know, I think this past week, maybe the week before. He's always reporting on profits. And he's a terrific economist. And he likes good economic policy, sound thinker. But I read his stuff because it's so fabulous because it keys to profits. Ed Hyman, same way, looks at profits. That's the only stuff. And, of course, the papers don't report on it. And then, look, behind this Dow 50,000 story is a very pro-growth policy axis coming from President Trump. The one big, beautiful bill has your tax cuts, deregulation. Let me just pause a minute. The tax cuts, okay? First of all, you're going to get a lot of refunds from last year because the bill was in July and the IRS never did catch up. No tax on tips and no tax on overtime, less tax on seniors, things of that. It's very helpful, okay? But also, on the business side, the corporate rate stayed at 21%, which is at the low end of advanced countries. That didn't move, permanent. But 100% expensing, 100% year one immediate expensing was made permanent in this bill. Machinery, equipment, R&D credits, factories. I mean, that's fabulous. And it allows companies to invest in themselves, their products, and their workforce. Okay, the workforce benefits from this. So that's behind this rally. And it's very profitable. And the deregulation will probably slash as up to $2 trillion in extraneous, unnecessary costs for businesses large and small. And then you've got your drill, baby, drill. Now, oil prices have drifted higher because of the Iranian tensions. We will talk about that in the show because it looks to me like we're going to have to bomb Iran again, which is the right thing to do. But the point is, oil's come down from about $80 really to $60, probably drop into the mid-50s, and the gasoline prices are down, and, oil permeates the whole economy. So I'm just saying these policies are all pro-growth. All right, and there's a business investment boom. That's called capital deepening, when they invest in new machinery and equipment and build new factories. We're building factories. Foreigners are coming here to build factories to avoid tariffs. And we're building factories because we can export our goods to better countries because Mr. Trump's reciprocity policy on trade. So all these things are pro-growth, and they're pro-stock market. They're pro-profits. And then I'll say, by the way, the Trump savings accounts, this underscores why you want to get these Trump savings accounts. And they're off to a good start. Newborns get $1,000 from Uncle Sam, up to $5,000 from their families, up to $2,500 from employers. And you can take people from poverty families or poverty areas and make them millionaires, by the time they're age 30, 35, or if they hold it till they're 65, it'll be even better. You have tables depending on your rate of return. At a 10% rate of return, which is pretty much the rate of return of the last 100 years in the stock market. That's the Jeremy Siegel stocks for the long run tables. Actually, it's about 200 years. But anyway, 10% a year, depending on how much money is in your account. But you'll be a millionaire certainly by the time you retire, and probably a lot earlier than that. And these kids, newborn kids, the new generation, they'll learn about the stock market. They'll learn about business. They'll learn about profits. They'll own a piece of the rock. They'll have ownership. And they'll understand why free market capitalism is the greatest system in the world. You want to end poverty? There's no better system than free market capitalism anywhere in the world. That's why the Trump savings accounts are so important. And they need to be sold left and right. They will be. They will be. This is a terrific thing. Terrific thing. I'm seeing Mr. Trump on Monday. I'm going to interview him for Fox Business. It'll be great fun. I haven't actually seen him in a little bit. We talk from time to time, but I'm just saying I'm looking forward to the interview. Heck, we've even got reduction in the federal budget deficit. If you saw Kim Strassel's column yesterday in the Wall Street Journal, the OMB, Office of Management and Budget, Russell Vogt, my pal, he's the director, smart guy. Because of faster economic growth, you're running 4 or 5% GDP, which is incredible. Because of faster growth and money coming in from tariffs and spending restraint, some rescissions, you're probably cutting the long-term, the 10-year deficit by about, I think the number is $12 trillion. All right, that still leaves a big deficit, but it's good progress. Good progress. So we'll be watching that, but that's also good news. Uncle Sam will be borrowing less. Interest expense on the debt is coming down because the deficit's coming down because of economic growth, because of all the growth incentives in that one big beautiful bill. Profits are soaring, and so is the stock market. It's a rocket ship. You know that? An absolute rocket ship. And I'll just say congratulations, America. Dow 50,000.
The Larry Kudlow Show on the Red Apple Podcast Network.
LifeLock, how can I help?
The IRS said I filed my return,
but I haven't.
1 in 4 tax-paying Americans has paid the price of identity fraud.
What do I do?
My refund, though.
I'm freaking out.
Don't worry, I can fix this.
LifeLock fixes identity theft guaranteed and gets your money back with up to $3 million in coverage.
I'm so relieved.
No problem. I'll be with you every step of the way.
1 in 4 was a fraud-paying American. Not anymore. Save up to 40% your first year. Visit LifeLock.com/podcast. Terms apply.